All right, Candle Range Theory Trader back with you with another video, just talking about the Candle Range Theory continuation trade. So let's get into it. This video is strictly dedicated to identifying the characteristics of a continuation trade from the Candle Range Theory. So the first one is a 4-candle pattern where the first 3 candles have already passed. It could be a 4-hour or 8-hour chart, but I'm going to stick to the 4-hour. So where you have the range candle, manipulation candle, and then candle 3. Now you have to look at the relationship between candles 3 and 2. And the rule is this: if candle 3, which is this big green one right here, closes above candle 2, which is this small red one right here, then you can take a continuation candle in the same direction. All right. You're expecting price to just continue with momentum. All right. And then for the short example, you're strictly focused on this candle right here because you notice candle 3 closed below candle 2. So you're expecting further momentum to the downside. You also have the 2-candle range theory, which is right here. So let's say if you have a range candle, price sweeps one side and then closes below it, then you can expect candle 3 in this case, because you have 2-candle for the CRT. Third candle, you expect more momentum to the downside as long as this candle 2 closes below candle 1. If it closes inside of it, this does not count. The close is the most important part for candle 2 on this one and candle 3 in this one. Okay, the close has to be above it. If it's not above or beneath, if it's not that, then this model doesn't work. So let's go to the real chart now to see some real examples from this past week. Let me get rid of this. Okay, so these were just a few of them that I found. So first we'll start with dollar yen. This was a 2-candle pattern. So we see here this candle here, which was at 5 a.m. Notice how price swept the low and then closed above it. So this candle right here at 1 p.m., that's our trading candle. So I'm going to drop down to a lower time frame just to see what our ideal entry would have been on this one. And while it did go for more pips, I typically only do just one candle. That's what I would do. So let me see here. So bar, go there. Let me mark the open price of this candle because we're just looking for another expansion candle in the same direction. Sometimes these trades, they may work, but sometimes they'll pay out big. Sometimes you only get a little bit. You can't predict how far it's going to go. So we go down to the 5-minute. Okay, and again, I like to trade the first hour of any candle that I like to trade. So that would pretty much be right here. Let me see. This box right here isolates the first hour. Okay, so let me see if there were any fair value gaps from the previous candle that may have helped us out for our entry. Not exactly. So that's fine. So hide that. So best entry would have been, anywhere from 1 to about 2. The perfect entry would have been like at 150. Then you could have got, let's see if we got 1 to 3. No, not quite. Well, let's see. It depends on what our stop loss would have been. If you decided to get away with let's say like a 6 pip stop loss, maybe 20 pip take profit, you could have got 1 to 3. Very tight stop, but I mean, I'm just saying that's about how far it went. So obviously you want to always check the spread if you do a top tight stop loss deal. But ultimately, this could have given 1 to 3 if you had like a 6 or so pip stop loss. All right, so that's how that would work. Let's get rid of all of this. Okay, let's see, Aussie yen gave one as well. I won't go through all the lower time frames. I'm just going to show these to you. So this was a candle 3 where once again we had price sweep below this low here. This was the low at 1700. It swept below it, closed above it. So this candle 3 right here at 1 a.m. was our ideal trading time. This one did have a longer wick, so it may have given a little more. It may not have worked out in the first hour, but let's see. So let's do our replay. And let's drop down to the lower time frame. Now this is one where you see it didn't move all that much. It really just mainly consolidated. All right, because this was the 1 a.m. open. You know, you could have got in, say like right here at 2, right at 2. That would have been in the first hour. You would have had a little bit of drawdown. But this one you really would have had to hold for 2 candles. That would have been the best entry right there. And obviously hindsight's 2020. We saw where it kept going. But if we put our stop loss below this most recent swing low, that would have been about a 10 pip stop loss. Man, let's see if we could have got a 1 to 3 on the next candle. We'll play that out. Okay, so that's the next candle, and it's still going, and there you go. Okay, so it would have hit at 10 a.m. So the entry would have been at 2 a.m. The take profit would have been hit around 9:45, 10 a.m. Okay, so that's that. But he would have had to endure this consolidation and, you know, all that type of stuff. But it did hit, so, you know, you could have got 1 to 3 out of that. Okay, so we get rid of that. Well, let's just do this. And the next one was EuroCAD. This was another one where it was just a candle 3. I won't go to the lower time frame on this one, but I'll just show you that this was once again a candle 3. This was a 2 candle range theory. Candle 1, candle 2 closed above. Okay, candle 2, and then this would have been at 1 p.m. And I'll just measure the candle here. It went for about 20 pips or so. So that's that. For pound CAD, this one would have been a short example. This is one where hopefully your TP would have hit because it did end on a wick. And then as we can see, price came all the way back up. So let's see. This was a 3 candle pattern. So this is 1, 2, 3. Price closed all the way down here. I like for the closes to be a little closer to the bottom of candle 2. Sometimes when it closes all the way down here, it may or may not continue. But we'll take a look at this one. Here, we'll go down to the 5-minute. And that was at, I believe, 9 o'clock. So this was the open. Looks like it didn't go down all that much. So, I mean, if you'd have got in right at 9:10 for a perfect entry, price went down 30 pips. So if you'd had a 10 pip stop loss, that would have been good for 1 to 3. So that would have been fine. But like I said, it ended on the wick. So it started retracing. So hopefully, you know, if you wanted to try that, you know, about 20 to 30 pips would be a good goal for something like this. Sometimes it will go farther, but I say 30 minimum, 20 to 30. Okay, so let's see, dollar, pound, dollar. Did give a short example right here. This was a 2 candle range theory. So this was the range. Let me make this a little bigger. Okay, so this was the range candle right here, close below it. So then we just look for this continuation down. I'm just going to measure it. I'm not going to drop down to the lower time frame. This was at 5 a.m. So price dropped here about 18 pips. Obviously, it did keep dropping on the next candle. So, I mean, if you want to try to get more on the next candle, you can. But, you know, that'll be up to you. And then lastly, New Zealand dollar. This was candle 4. So we had a traditional candle range theory, which was a 1, the range candle manipulation, and then closed above. So this one I will drop down because it has a very long wick to see what our best entry would have been at this one. This was at 1 a.m. So we'll do the replay. We will select this bar here. And we see our price wicked all the way back down to the top of this candle here. But let's drop down. Let's mark our open price and see what our best entry would have been and see if it would have failed in the first hour. So that's the open, 5-minute. Okay, so these railroad tracks right here on the low would have been a good entry. And that would have been at 235. So that would not have been in the first hour. Let's see here. That would have been the best entry right there. And as far as risk to reward on this one candle, I don't know if the next hour went up or not, but from the open, I'm sorry, not from the open, but from the bottom to where this candle closed, it went up 12 pips, 14 pips. Not a lot there. Let me see if the next candle did give us at least 30. I'm not sure if it did or didn't. I'm just going to hit the play button and see what happens if it trended or not. I don't think so. Yeah, no, I'm not trying to hold anything that long. So, yeah, this would have been as good as it was going to get on this one. So this one wasn't the best one. So, they're all not going to just hit your TP every single time. You got to use your best judgment. Take what the market gives you. We wish we could predict how far price is going to go at any given moment, but unfortunately we cannot. Now, there is one thing that you can do to possibly improve your odds when it comes to taking continuations, and that's to add an EMA, which in this case would be the 50, which is the 50 EMA right there. And what you can do is have a rule that says that if it's I'm only going to take continuation trades if price is above the 50 EMA for a long, or below if it's a short, like on dollar CAD right here. Okay, just for continuation. So in other words, that could be a filter. Do you have to use this? No. But what I'm saying is that if price is oscillating or moving below the 50 EMA, that may just give you a snapshot of a possible strong downtrend, and so that your continuations may or may not be more likely to play out. If you're going to use that as like a filter to say, okay, I'm going to see if the likelihood of continuation is going to be strong or not based on where price is in relation to the 50 EMA. So once again, if you want to look for continuations, candle range theory doesn't matter, but I'm talking about only for candle 4 and candle 3 for the 2 candle one. Okay, if price is below it, I'll take those continuations below the 50 EMA. And if it's above it, like over, I think it was here, see how this price is above the 50 EMA and price did continue for 3 more candles. So maybe that might add to your conviction and say, you know what? I think the trend may actually be longer, so I'm going to hold for a few more candles. And if you employ that rule here, you see there, this did give more upside where you could have gotten, let me see how far this went. That went for 75 pips, right? If you would have held it for a couple more candles, okay? So again, I'm not saying it's completely, going to be 100%, but even here as well, here's another one that I didn't mark, where you have your range candle manipulation, and then this, let me get rid of these drawings so you can see this. This is the range low manipulation, and then this candle here closes above the high of candle 2 right here. So your continuation could be right here. This will be candle 4. I wonder if this was at 5 a.m. 5 p.m. may have been. Yeah, that's why I didn't mark it. This was at 5 p.m. So yeah, times are tricky, but at the same time, it did play out. So, if you wanted to take that and take your chances with that, I just don't like trading the 5 p.m. candle because of the market reset. But it did play out, and you could have held this for at least 2 more candles. So that wouldn't have been a, entry somewhere in there. And then 2 more candles. It did, actually 3 more candles. It did hold out until this large spike down for the USA session or New York session. But again, notice how price was above it. So do you have to have the filter of the 50 EMA? No. But it is something I'm experimenting with to see if it's going to increase the likelihood of continuation trades. But I've seen it go both ways. At the end of the day, we can't predict anything. But any little thing that we can do to put the odds in our favor, we experiment with, we try and just see what happens. So, but that's the continuation trade. So even if you miss the regular CRT, if you want to just focus on continuation trades, you can do that and see where it gets you. So appreciate your time and attention. Thank you so much for watching, and have a great rest of your day. Take care.